Shreya, you may begin.
Sure, ma'am. Good afternoon, everyone. I, Shreya Malhotra, on behalf of BRICS Chambers of Commerce and Industry, welcome you to the webinar on understanding the revamped ITC provisions and final call for the GST adjustments and rectifications for FY 2021-2022. The BRICS Chamber of Commerce and Industry is a parent organization which promotes commerce and industry in BRICS nations. The chamber, founded in 2012, with the efforts of eminent professionals and entrepreneurs, is a non-profit and non-governmental organization. BRICS CCI is a registered body empaneled with Niti Aayog and recognized by the United Nations. Today's webinar, in its first session, will cover the following topics: revamped provisions for availment of input tax credit, mandatory reversal of input tax credit in certain circumstances, key changes in GST returns with effect from 1st October 2022, including disclosure in GST 3RB for availment/reversal of input tax credit. Followed by the second session that will throw light on the following subjects: key timelines for adjustments and rectifications for FY 2021 and 2022, adjustments and rectifications with respect to outward supplies, adjustments and rectifications with respect to ITC/reverse change mechanism, GST refund related changes, other key pointers with respect to FY 2021 and 2022, and common errors. Our panel consists of eminent personalities from the industry today. We have with us Ms. Nidhi Goyal, Managing Partner at Avinav Consulting. Ms. Goyal is an MBA and CA with over 25 years of experience in financial, tax, and regulatory matters, and has work experience with professional firms of repute. She has been active in working on sectors aviation, aerospace, defense, infrastructure, including roads, power, tunnels, and ropeways, EPC. Her experience includes rendering financial advisory, financial modeling, structuring advisory, merger and acquisitions, joint ventures, and technical collaborations. Ms. Archana Jain, founder of Archana Jain and Company. Archana is a qualified chartered accountant with over 13 years of experience of cross-functional experience in accounts, finance, and indirect taxation. She has a vast experience in handling internal audits, forensic audits, GST audits, AEO certification audits, custom audits, SVB orders, EDD matters, SAD refunds, and other DGFT matters, and providing advisory and litigation assistance services in relation to indirect taxation to key multinational companies. She has represented reputed corporate houses at Service Tax, VAT, and Custom Department for appeals and refund cases up to CE Stat, handled POEM, anti-dumping assignments. She has been a speaker at various seminars held at FICCI, PhD Chambers, and ICAI. Also a speaker at Delhi GST office at ITO for offices, training for GST Trend Fund, and various critical issues under GST. Mr. Shanky Agarwal, partner at BMR Legal Advocates. Mr. Shanky specializes in tax litigation and has been involved in a number of high-stake litigations with over 13 years of robust experience in both indirect and indirect litigation, which is his area of expertise. He obtained his Bachelor of Law degree from esteemed Indian Law Society Law College, Pune, and is also qualified Company Secretary and from the Institute of Company Secretaries of India. He qualified as an advocate on record of the Supreme Court, along with being a member of the Bar Council of Delhi, the Supreme Court Bar Council, the Supreme Court Advocates on Records Association, and a fellow member of the International Fiscal Association. He has authored a book, Goods and Service Tax, Decoding Important Issues and Emerging Litigation Trends for Taxmen publications. Mr. Shanky regularly speaks in various national and state level seminars on tax-related issues. Mr. Sarthak Garg, partner at Garg Manoj and Associates. Sarthak is a chartered accountant by profession and is a member of the Institute of Chartered Accountants of India. Sarthak has vast experience in the field of indirect taxation and is currently leading the indirect tax practice at Garg Manoj and Associates. Based out of New Delhi, he has worked across various industries, including healthcare, hospitality, automotive, FMCS, dairy industry. Sarthak has provided a strategic advisory and litigation services to various clients on indirect taxation, including goods and service tax, central excise, service tax, customs, and value-added tax. etc. He has experienced of representing clients before various forums. He has also assisted clients during search, departmental audit, and survey, and has also carried out indirect tax health check, detailed indirect tax compliance review of various clients. Sarthak has experience in analyzing and advising on the possible impact of GST for various industries and assisted clients in smooth transition from the erstwhile indirect tax regime to GST. Mr. Saurabh Besar, partner at BGJC and Associates. Saurabh Besar is a qualified accountant with over 8 years of experience in indirect taxes advisory and litigation. He is currently a partner at BGJC and Associates LLP. Saurabh has also worked with, I beg your pardon, with Deloitte in the past and has been actively engaged in advising the clients across multiple sectors in GST as well as under the erstwhile tax regime. I would now like to call upon Ms. Nidhi Goyal, the moderator for this afternoon, to kindly initiate the session.
Yeah, good afternoon, everybody. And thanks, Shriya, for the introduction and of course of the topics also, which are going to be part of our today's session. So I hope that everybody has been sorting out their issues of 31st March. And of course, it's a good opportunity, of course, to get the maximum benefit out of the old issues and after specifically after the audits being over. And this time, fortunately or unfortunately, audits were concluded within the due date. There was no extension which was given, except that small extension was given for the tax audits. And we, of course, have got a good opportunity to take the benefit, but at the same time, there are, of course, issues connecting with taking those benefits, and some of the issues will be taken up by all the speakers today. And there is a notification which is number 18, central tax, which is dated 28 September, which has actually extended some benefits, or I would say extension, at least for a month, for filing the taking the benefits of input tax, and also some of the, I would say, credit notes and invoices, etc., which have not been taken care of while finalizing the accounts or on 31st March 2022. So this notification will be taken up with the detailed explanation, and there was also clarification with respect to the time limit for certain compliances where there was a ambiguity or understanding or ambiguity in understanding, and that has been taken care of in this. But those points also will be taken up by the speakers today, and all the various other changes which are going to get affected in the coming months. I would say that we have already crossed 5 years, and this is the best time to even reflect what we have been able to achieve in the industry and also been able to achieve in GST regime. And we should appreciate the changes which have come up in the business or industry due to the GST, but also in the, I would say, in the professionals, that they have gotten a good opportunity to take up or support or provide help to the industry in all these matters from the business perspective. So I would now hand over the session to Archana. Are you taking that first?
I'll be taking first.
Okay. Yeah. Yes. Thanks.
Yes. So let me first share my screen for everyone. I hope my screen is visible, Nidhi.
Yes, clear.
Okay. So before we begin today's discussion, I just thought that let me just give you a background as to what has transpired in the last round of amendments which have happened in the GST law. So most of you would be aware that a number of amendments were made when the Finance Act 2022 was announced by the Finance Minister in the month of February. But those amendments were not notified till yet. And if you remember that the changes which were made in the month of February, they were quite wide ranging. And now, very recently, the changes have been notified. Now, just to give everyone a snapshot as to why or what these changes are. So, as you may be reading in the newspapers that the government, after the settlement, the settling down of the GST regime, the main headache or main problem that the government is facing is the menace of the fraud or the fake invoice cases. So what seems to be the highlight of or snapshot of these provisions is that the government wants to further uh, uh, make the ITC provisions very stringent, and although we will discuss these issues in detail, but the thinking from the government seems to be that they want to put all the burden on the part of the recipient if the recipient wants to claim any credit of input tax. So this seems to be the thinking of the government, that in order to to reduce this menace of the fake invoicing, the responsibility will be given to the recipient, and the recipient should ensure that the services or goods which have been received from the supplier, all those invoices are genuine or the supplier is genuine. With this in mind, let me just start and with the what are the changes. So as I already noted that in the Finance Act, there were 15 section 100 to section 114, which brought in wholesale changes in the input tax credit, in the return filings, and other aspects of GST law. These have been recently notified in the month of September, on the September of 28th, wherein all these changes have been notified except one or two which had been already notified. So, and corresponding changes have also happened in CGST rules. So first and foremost change which has occurred in the GST regime, as far as input tax credit has been is concerned, is that there is one more condition for eligibility of input tax credit. So all of us know that a number of conditions already existed for the taking of credit, which means that a supplier, the recipient should have the invoice of the service. The details should be correctly reflected. They should have received goods and services, and the tax should have been already should be actually have been paid to the government by the supplier. But what has happened is that if you see on the screen this BA, the details of ITC should not be related to restricted supply under section 38. So this restriction, which is there under section 38, is something which has been recently notified by the government by way of this notification read with Finance Act. So to summarize, so apart from the conditions which already existed in the law, there is one more conditions which the taxpayer have to deal with from now on, which would become one more matter of concern for the taxpayer. So we will discuss as to what has happened after this amendments. But before that, let's see what was the old mechanism which was envisaged before all this amendment happened. So if you remember, there was before the 2022, there in the GST, there was something called matching of invoice concept, which was there. This concept was introduced but never notified by the department. As per that mechanism, what was envisaged was that the seller, if the seller issues an invoice on which tax has to be input tax rate has to be taken, then those details first have to be furnished in his details of outward supply. That means under his GSTR1 return. The buyer, once it receives that intimation, it has to accept, modify, or delete all those the entries. That modification or acceptance has to then will go back to the seller, and if seller accepts all these modification or reconciliation, then and only then it was envisaged that the recipient would be able to take credit. Now the entire purpose of this matching concept or matching principle was that both supplier and recipient should be on the same page, but this mechanism of matching of invoices or matching principles was not notified, and before even it got notified, it has been removed and replaced by the government by this the new condition which is there under section 16(2). Now, so now what is envisaged instead of the matching principle? First step is common, that in the GSTR1, the supplier will file the details of outward supply, and the recipient will get an auto-generated return, which is called GSTR2B. Now, the previous concept was that whatever was there in the GSTR2B, if it is creditable, if there was no restrictions on those entries, then the recipient would be able to avail credit on all these invoices. But now what will happen going forward is that the GSTR2B will consist of two parts. One part would be that ITC, which is available or eligible for the recipient, and there would be a second part which will say ITC, the goods or services on which ITC is not eligible or available to the recipient. Now, what are those conditions on which ITC will not be eligible or available to the recipient? Those conditions have been prescribed now under section 38. And these are all new conditions. So these were not there previously. So first condition is that if the inward supply has been received from a supplier who has a new registration. So, and the new registration supplier will not be able to pass on this credit up to a specified time limit. So let's say there's a supplier who has within this month has taken GST registration and he wants to pass on the credit. The provisions have now been worded that the department would be able to restrict the credit passed on by such new service providers or new registrants under GST. What is that time limit has not been notified by the department. So effectively, this provision as such does not apply right now. But this as and when this time limit is notified, recipient of service will not be able to take credit from any supplier having new registration. So this is the first condition. Second is you cannot take credit from the supplier who has defaulted in the payment of tax and that default has continued for a prescribed time period. So, and what is that prescribed time period? Again, the government has not notified. So effectively what will happen is that government will say that if the supplier, and let's take an example of 3 months, if they say that if supplier remains in default for a continuous period of 3 months, that means that if supplier has not paid tax or he has not filed return for 3 consecutive months, then even if the registration that supplier gives any credit, provides any credit, the credit will not be eligible or available for the recipient. So this is the second condition. Third is when I declare something in GSTR1, my output supply, and my tax paid on under GSTR3B is lower than GSTR1. So this is the third condition. In this condition as well, the recipient will not be able to take credit on those invoices. So this is the third condition, important condition. Third is a supplier who has taken more credit in his GSTR3B than what was eligible to him under GSTR2B. So if he defaults, so again, if supplier is defaulting or taking more credit in his return, even by that default, a recipient has to suffer, and I have to ensure that okay, the supplier has taken the adequate or the eligible credit only. He has not taken any credit more than what is shown in GSTR2B. And fifth condition is that if the supplier has taken more higher than proportional credit which is available in ECL. So all of you would remember that there is something called Rule 86B, which says that a supplier can avail credit only up to the extent of 99%, and 1% he has to necessarily deposit under from his cash ledger. So if I have defaulted, if the supplier defaulted from that perspective also, then also the credit will be restricted at the end of recipient. And the sixth important condition is any other notified person. So the central government has also reserved its right to prescribe that any of the notified persons will not get credit. So if you just again, if we read all these six conditions together, what appears to be the case is that effectively the recipient now is have to do like a KYC or know your supplier, and you have to ensure that supplier has done everything, and only then the recipient would be eligible to take credit. Let me just try and explain this with the help of an example. So on your screen, if you see, earlier what used to happen was total ITC as per books, as per my books is 2 lakhs. But my supplier has shown only 1,60,000. So first, my restriction was that I would be getting only credit up to 1,60,000 rupees only. Then I will have to see that how much I'm eligible to. So if I see that from 1,60,000, I'm only eligible up till 1,30,000, then I would get my credit will be restricted up to 1,30,000 only. That was the only thing which was applicable on a recipient. Now, what has happened is after this amendment, let's see what is the position. So out of this 1,30,000, my total credit which was eligible, what I need to see is whether my supplier is a new registrant. Let's say that credit is 5,000 rupees. So that again will get deducted, and my liability, my eligibility will remain at 1,25,000. Then I have to see whether supplier has filed their GSTR1, but he has not filed GSTR 3B. That means he has not paid tax to the government department. So again, 9,000, assuming in this example, 9,000 is that kind of supplier, then again that will go away. So my eligibility again will go down. And then third is whether supplier's liability in GSTR1 is greater than 3B. So that will go down. So if you see by that logic, on each and every step, recipient will lose credit in cases where supplier has not correctly shown has not correctly filed the return, or he has not correctly followed the mandate of the law. So effectively on the default of the supplier, the recipient will have to suffer. So this is the most important change which has occurred in the law. Now, this is the first thing. Second thing is, second major change is that now instead of filing the returns on month by month basis, what the endeavor of the department or the government is that now there is a sequential filing of the returns. So let me just explain this a bit. So earlier, so now what you have to do, what a supplier has to do is, first he has to furnish the statement of an outward supply, which is GSTR1. Once GSTR1 is filed, then only GSTR 3B will be accepted. So GSTR 3B cannot precede GSTR1. Then for the next month, unless I have filed both GSTR1 and GSTR 3B for the previous month, I cannot file GSTR1 for the next month. And then simultaneously, after filing GSTR1 for the next month, I would be able to file GSTR 3B of the next month. So basically, now there's a sequential filing, file 1, then 3B, then 1, and then 3B. And then obviously at the end of the year, you will have to file GSTR 9C. So ultimately, what has happened is that there is a sequential filing of the returns. So the major changes have happened in section 37.4. I'm just giving a very brief background. So basically in 37.4, earlier there was no provision that, for the filing of previous return or previous GSTR1 is necessary. Now 37.4 has been amended, and which says that GSTR1, unless I file GSTR1 for the previous period, I will not be able to file GSTR1 for the period. So if I have not filed GSTR1 for the month of October, I will not be able to file GSTR1 for the month of November, and so on and so forth. So this provision will apply from the month of November onwards. So for the month of October, it does not apply, but for the month of for the returns for the month of November onwards, all these conditions will apply. And then similar changes have happened in 3910. So in 3910, which talks about GSTR 3B, it used to say that if I have not filed the return, so if I have not filed GSTR 3B for the previous month, I will not be able to file GSTR 3B for this month. Now what it says is that unless I filed both GSTR 1 and GSTR 3B, unless both have not been filed, I will not be able to file GSTR 3B for this month. Again, all this points to that a sequential return has to be, sequential credit has to be taken. Oh, sorry, sequential returns have to be filed. Now, other important change which we have briefly captured. So, as we had noted earlier, that previously the government had envisaged a idealistic system which was called matching principle, wherein supplier will furnish details, I will verify, rectify, and then send it back to the supplier, and one supplier again submits it. Then only after this matching size only I will be able to take credit. Now, all those provisions which enabled this matching principle, although they were never notified, but before even their notification, these provisions have been omitted. So without going, without going into too many details, all these matching principles, which were contained in section 42, 43, 43A, have been removed without even being notified. And instead of it, there's a new regime, which we have already discussed, have come into place. So this is one major change which you have to keep in mind when you file the return. Another important change is earlier under 41, section 41(9), when you used to take credit, the credit was deemed to be a provisional credit. But now, since they have put in so many conditions on the input side, that I have to go through several hoops in order to, if I have to actually avail credit which have been paid and verified by the supplier, then only I'll get it. So therefore the government has made a change wherein if I have, now there is no concept of provisional credit, the credit will be finally given, and there is no, the concept has been removed. And if it is found that those conditions have not been specified or satisfied in the later point of time, then the credit will have to be reversed. So basically, the concept of provisional credit in my electronic credit ledger has been removed, and instead of this, the final credit, it will be deemed that I have availed the final credit, and if the conditions have not been met, or it has been found that it has not been met in the later part, then I have to reverse the credit and I have to pay interest in the manner which is prescribed. So this is also one change which has happened. Then another change. So we have briefly discussed section 86B, which restricts the credit even if you have validly availed the credit which is available for utilization. But section rules 86B of CGST rule, it prescribes that the output service provider can utilize only up to 99% of credit, provided, if you fall in that category. Now, interestingly, this rule, because this rule was not mandated, or there is no provision under CGST Act which gives the backing, sort of. So basically, unless this rule is envisaged under the Act, the government will not be able to make this rule. So this became a point of controversy before different high courts, and there is, in Gujarat High Court, in Aap and Company case, the Gujarat High Court has also issued notice on this, saying that the central government's rule 86B, is not valid. So therefore, this controversy is pending in different courts. So this is this provision. So what government has done is they have introduced a new provision which is called 4912, and 4912 says that the central government can introduce any restrictions in the utilization or the proportion of input tax credit which can be utilized by a supplier. So what it does is it does two things. One, it preempts. So if let's say if High Court decides that this provision Rule 86B is not valid, then they will say that, okay, we have already amended the CGST Act, and as per Section 4912, this rule gets the legislative backing, the necessary legislative backing. And secondly, if they want to introduce further condition in availment or utilization of the validly availed credit, then they can use the provision of 4912 and make further notification of the rules. So this is the entire purpose of 4912. So effectively 4912 says that if central government creates these kinds of impediments, or they create any kinds of restrictions in the proportion by which the credit has to be utilized, and that rule will be valid. So these are the changes. Now I will stop here and I will request Archana to take the audience through the changes which are there in the GST returns and other changes.
Thank you so much, Shanky. And you had really, what should I say, set the stage very perfectly, right? And before I initiate my deliberation, I would like to thank BRICS Forum for giving us this wonderful opportunity and organizing such kind of webinar to update the taxpayers and the other CCIs with respect to what all amendments are happening around in the field of indirect taxation. So as you have already taken most of the amendments which are being applicable or which has been made applicable, so may I request the audience, in case they have some quick queries, because then my deliberation is only with respect to the amendments which are made effective. As you've already said that many amendments had happened in Finance Act 21 and 22, but they have made effective from various different dates. So I will be taking an updates on all those updates, which are amendments which are made applicable from the 1st of October 2022. So I think the presentation will be still required. Okay, so any queries from the audience on the issues that has been dealt so far? So, okay. I think no queries. No queries means everything that has been explained has been well adapted and well accepted by the audience. Okay, so let's move further then. I think let's move to the amendments which has been made applicable with effect from 1st of October 2022. So may I have the presentation once again?
Once again, let me just reshare it.
So I think I have to share myself so that I can run the PPT. Or will it be comfortable for you?
Archana, it would be best if you run it.
Yeah, I'll do so. I'll do so. So then just give me a moment.
Hi, ma'am. Sorry to interrupt. We have a quick question here from Ash. She's asking, what are the conditions necessary for obtaining ITC?
Very good question. So what we have seen till date, that has been totally changed, and what we used to call the self-assessment has been now made, what should I say, as per whatever the portal is showing to you. So my simple question will be, still we need to fulfill the condition that has been mentioned in section 16 subsection 2. Now there are two additional conditions. One, everything has to be there on the portal because AA has been inserted, and BA means that should not be restricted as per the portal only. So now with 38 coming into play, we have to understand that everything has to be through the portal. So there is no such thing called provisional kind of ITC available to you. So yes, you have to see whether the same has been updated on the GSTR 2A 2B, and it should not be restricted by the portal. So whatever less after deducting everything, and whatever is appearing and which is eligible to you is the only ITC that you can avail now.
Okay, ma'am. Thank you.
Yeah, thank you. Any further query?
Not as of now, ma'am, since we'll be taking the Q&A round at the end of the both session.
Sure. Okay, so these are the amendments that has been made effective from 1st of October 2022. The first and foremost is, yes, as I have already told you, that new insertion of clause BA in section 16 subsection 2 has been inserted, and which says if somebody has defaulted, that means your vendor has defaulted in paying tax for such a period or short paid taxes for a certain percentage, or has availed excess ITC. Your vendor has availed excess ITC by such limit or utilized ITC to pay taxes in excess of the maximum limit allowable as per your provisions of 86, where you are allowed to use the maximum of 99%. So in that case, in such case, any violation has been done, then they have to be considering everything, and that will be allowed to you only within the limits that is eligible to him, or taken registration within such period. That means there is a mandate requirement as per section 22. Whenever you are liable to get yourself registered, and within that time period of 30 days, you have not taken the registration. So even that period, the delay in case is happening, then also you're not eligible to take the credit of the same. So all these things has to be taken care, and any other cases as may be prescribed. That means any other cases that can be issued by notification, or that can be issued later on by the government. So everything will be covered under this new restriction. The period, limit and percentage of such restriction is yet to be finalized and fixed, and may be done in due course of time, as we have seen that there was a provision of Rule 36 sub Rule 4 where they have restricted to the extent of 20% in addition to what is appearing, then they reduced to 10%, then 5%, now whatever is appearing, and that too with a restriction, it should not be restricted on the portal. So we are seeing all these things, and what I feel is that initially when the GST law was implemented, it was a seamless flow of credit. But now on a lighter note, what I feel is seamless, SEEM and LESS, seamless credit, because this is the, I think, intention on which we all are going forward. Because I personally feel that yes, if somebody is done anything and he's a bona fide taxpayer, then he should not be punished for the black sheep that are around in the industry. But the provisions that are being made, they are made in such a manner that because of the black sheeps, all the genuine taxpayers are also being getting caught. So another amendment which has been made effective is the cancellation of GST registration for the non-filers of the return. Now they have given us some kind of relaxation that yes, now this non-filing continues for 3 tax periods or 3 months, whatever the case may be. So then in that case, beyond 3 months, or if you are a quarterly filer, so accordingly they have to manage the things, that then there should not be continuous 6 months non-filing. So in that case, only they will be invoking this cancellation. Earlier, what it used to be like, even there is a delay of 1 month return or even 2 months return, they used to invoke this provision because there was no such clarity. So now they have given this clarity. Now it has to be beyond 3 months. Claiming of ITC on self-assessment basis, that we have already dealt with. Now there is no such concept of self-assessment basis on a revisional basis. Everything has to be decided by the portal only. With the insertion of 16 AA, that means everything has to be appearing on your GSTR 2A, 2B, or BA, that means it should not be restricted. So these two conditions has been inserted in section 16 subsection 2, which is the provision of the eligibility of your input tax credit. Now everything has to be decided by the portal itself. Refund got more facilities. So yes, now they have given the refund, you can file the refund of excess cash balance that is lying by PMT03, that is your electronic cash ledger. Whatever is balance is there available to you after your returns has been filed and there is no obligation or any liability due on you, then you can file the refund for the same. The supplies to SEZ developers or SEZ units, refund is to be filed within 2 years because there was an ambiguity. Why this ambiguity? Because if you go and read the provision of section 54 subsection 3, there is a provision of relevant date. In 54.1, they have mentioned the word relevant date, and that relevant date has been clarified after the explanation. And in that, if I see all the provision A to H, I don't find any space for SEZ supplies or SEZ developers, supplies to SEZ units or developers. Because what they are talking in first explanation is with respect to export of goods, then export of services, then inverted duty structure. Everything with respect to 54 subsection 3 has been taken care of. But because there is an amendment in the word zero rated supplier that has been substituted by the word exports, so there was no specific provision lying for supplies to SEZ units or developer. With this amendment, now they have said, okay, whatever supplies you are making to them, then it has to be filed within 2 years from the due date on which GSTR 3B is to be filed or ought to have been filed. There were a lot of confusion on this matter, especially with reference to the relevant date. So now that has been taken care of. So now the relevant date has to be calculated from the date of the filing of the returns. Then for UNO and other also, they have extended, earlier the time limit was 18 months. Now they have extended it to 2 years. So now they have made it a uniformity. Not paying the vendor in time under GST. Because there is a provision of 180 days or whatever the timeline is there, lower or the 180 days is the maximum timeline. Though there is a lot of ambiguities and lot of hue and cry going on for this, because there are many other aspects that are prevailing in your day-to-day business scenario, or your credit time period may be of some period beyond 180 days also. But yes, now what they have said is the taxpayer need to pay along with the interest from now on. If one has availed the ITC but failed to pay to the supplier within 180 days from the invoice date. Now the very important word over here which is mentioned is fails to pay. The fails to pay means it will only arise when the liability to pay is there. Suppose my contract itself talk about period beyond 180 days, then I could not fall within the definition of fails to pay. Because fails to pay can only be invoked when there is a timeline on when there is an obligation to pay. But anyways, they have not, dealt it in such a manner. They have given a restriction that whatever it may be, you have to make the payment within 180 days. Earlier, there were recommendations to impose interest for delayed payment beyond 180 days by the buyer to the vendor if ITC has been availed, but it was not notified. But now with the new changes in place, the interest liability will also accrue. This means that though the buyer can reclaim the credit after making such payment, the interest would become a cost, because either you recover it from the other party, otherwise it is going to be a cost to you. So now, yes, in case of a non-payment, you have to make the payment of interest from the date of invoice and not beyond 180 days. Whatever the time period is left out with respect to the payment beyond 180 days, no. That clarification has been issued. Now you have to calculate the interest liability from the date of invoice. That means they will interpret that it has been availed by you. So these were the few important changes that were made applicable. Yes, the threshold for the invoicing has been reduced. Now it is 10 CR. So apart from this, most of the changes has been done away. That has been taken care by Shanky in his first part of the deliberation, and others which has been left out, I have tried to cover them up. And with this, I'll open the forum for any quick queries on these aspects which I have dealt with. Okay, so I'll stop sharing. Okay. So anything from the audience?
Yes, ma'am, we have a few questions here. Just a minute. So we have a question from Aditya Jain. He asks that with respect to the new form GSTR 3B, what is your opinion on how and where to disclose provisional reversal rule of 42/43, which will be regularized at the end of the year? That is addition or reversal at the year end.
I think I'm not very person who is filing the returns very often, but still I'll take the help of Sarthak or Saurabh if they can help me out in this aspect and if they can take up this thing, because it's a practical question. And I think there is a provision in reversal. They have given these different columns of the reversal in the new format of GSTR 3B with the indication also. And as per those indication and guidelines only, we have to show them whether it is pertaining to 17.5 or it is pertaining to other reversal that we are doing them. Am I correct, Saurabh?
Yeah, actually I'll cover this
in the next part of the session.
Okay. So this will be taken care in the next part of the session. Okay.
Yeah.
And I think this is also your part, input tax credit on motor vehicle admissible, because it is a very blunt answer that no, it is not applicable, not available at all, because whatever is covered under motor vehicle act has been barred under section 17 subsection 5, apart from few exclusions that they have already given. So you need to have a training school or a learning school to avail the input tax credit, or you ought to have into the same line of business, otherwise it is restricted. So what is the ITC entitlement of a newly registered person? So I could not get the question, what exactly the question is all about, because newly registered person means whatever you have after your registration is only for which you will be eligible for the ITC. Before that, so you will be treated as a B2C only, because once you have a GST registration, then only you will be eligible for claiming the ITC.
Okay, ma'am. So should we go on to the next session?
Yes. Thank you so much. And I'll hand over the podium to my two other learned speakers for the day. Thank you so much.
Thank you, ma'am, for that insightful session. I would now like to call upon Mr. Saurabh Besar and Mr. Sarthak Garg to go on with the next session. Thank you.
I hope my presentation is visible to all the participants.
Yes, sir.
Okay, great. So I will start the session. So a very good afternoon to all the participants and all the esteemed speakers. Thank you, Shreya, for the kind introduction earlier. It's always an honor to be speaking on this illustrious platform, which is provided by the BRICS Chamber of Commerce and Industry to all of us. Many thanks to Shanky and Archana ji for the wonderful session on the topic of revamped ITC provisions. Indeed, with effect from October 1, 2022, stringent conditions have been imposed in order to avail the input tax credit of GST in the hands of the recipient. And one cannot deny that going forward, claim of GST input tax credit in the hands of buyer would be completely dependent upon tax compliant suppliers. So as Archana ji mentioned earlier, that there is no provision that has been left for provisional claim of ITC. So unless and until your ITC is reflecting as eligible on the GSTN portal, in such scenario only the taxpayers will be able to avail GST with effect from October 1, 2022. So you all must be aware that in the recent months, a lot of changes and amendments have been made in the GST law. The other day, I was reading somewhere that the GST Act and rules have been amended more than 500 times since it was introduced on July 1, 2017. Over 100 of circulars have been issued in order to clarify the ambiguity which exists in the GST law. So looking into the number of times the law is amended, it can be said that the GST law is definitely becoming a good law, but surely it is not that user-friendly for the taxpayers and the assessees. So despite these frequent amendments and changes, certain relaxations are also provided by the government as far as the GST law is concerned. So for instance, by the Union Budget 2022, the time limit for availment of input tax credit by a registered person in respect of any invoice or debit note pertaining to a financial year has been extended to 30th November, following the end of the financial year to which such invoice or debit note pertains. So earlier, the date for availment of such credit was the due date of filing of September GSTR 3B, that is 20th October. Now, after the amendment has been made effective, such due date has been extended to 30th November of the subsequent financial year. Further, the due date for corrections or amendments and reporting of missed sale invoices or debit or credit notes for a particular financial year has also been amended and extended to 30th November of the subsequent financial year. So in my opinion, these amendments are very important since it would also impact the adjustments and rectifications which has to be undertaken by a taxpayer for the financial year 21-22. So in the current session, I would be discussing the key GST provisions that are important for adjustments and rectifications for transactions pertaining to financial year 21-22. Further, I would also be discussing the timelines prescribed under the GST law that have to be kept in mind by the taxpayers while undertaking the adjustments and rectifications for transactions of financial year 21-22. And thereafter, I would be briefly discussing the important adjustments and practical rectifications which have to be undertaken with respect to outward supplies, with respect to input tax credit, with respect to ITC and reverse charge mechanism. So as you can see the screen, among all the major changes as made by the Finance Act 2022, subsection 4 of section 16 of the CGST Act has also been amended. Such amendment has been made effective from October 1, 2022, via notification number 18 of Central Tax dated September 28, 2022. So you all must be very well aware that subsection 4 of section 16 deals with the time limit to avail the GST input tax credit in respect of any invoice or debit note which is issued during a particular financial year. So before this amendment was made effective, the time limit to avail the input tax credit in respect of any invoice or a debit note issued during a financial year was earliest of two dates. That is either the due date of furnishing of the return under section 39 for the month of September following the end of financial year to which such debit note or credit note pertains, or the date of furnishing of the relevant annual return, whichever is earlier. So before the amendment was made, there were two dates. One was the due date of filing of GSTR 3B for the month of September, or the date of furnishing of the relevant annual return, whichever is earlier in fact. In other words, it can be said that input tax credit pertaining to an invoice or debit note issued in a particular financial year can be claimed earliest of either the due date of filing of September GSTR 3B of the subsequent financial year, that is 20th October, or 31st December, which is the date of furnishing of the relevant annual return for a financial year. So this provision, section 16, subsection 4, has now been amended and has been made effective from October 1, 2022. So with effect from October 1, 2022, the time limit for availment of input tax credit by a registered person in respect of any invoice or a debit note pertaining to a financial year has been extended to 30th day of November following the end of financial year to which such invoice or debit note pertains, or the date of furnishing of the relevant annual return, whichever is earlier. So before the amendment was made effective, if I talk about financial year 21-22, the time limit to avail input tax credit for transactions undertaken during such year was the due date of filing GSTR 3B of September 22, that is 20th October 2022, or 31st December 2022, in case the taxpayers have not filed their annual return. So earlier of these two dates were the timeline to avail the input tax credit for the debit notes or invoices pertaining to the financial year 21-22. So this provision has now been amended and changed to 30th November 2022. So it is important to note that there have been two schools of thought on the applicability of this amendment, which has been made under section 16, subsection 4. In this regard, initially when the amendment was notified via notification number 18, doubts were raised as to whether such amendment is going to be applicable for financial year 21-22, or is it going to be applicable for financial year 22-23 onwards. So in this backdrop, a press release was issued on October 4, 2022 by the Central Board of Indirect Tax and Customs, and it was specifically clarified in that press release that the extended timelines notified via notification number 18 would also be applicable to the compliances for financial year 21-22 onwards. Further, as far as I remember, it was also clarified that the rectifications and adjustments in respect of a particular financial year can be carried out in the relevant return or the statement filed or furnished up to 30th November of the next financial year, or the date of furnishing of annual return for the said financial year, whichever is earlier. So therefore, it is now well settled that there is no ambiguity as to whether the extended timelines of 30th November would be applicable to financial year 21-22 or not. So as far as the ITC is concerned, taxpayer can undertake their input tax reconciliation for financial year 21-22 with the corresponding GSTR 2A and 2B, which is available on the GSTN portal. And if it appears that any credits have been missed or not been availed, then the same may be availed in GSTR 3B of October 2022, which is to be filed by November 20th, 2022. So in fact, for financial year 21-22, if there is any missed credit, then the same can be availed in the GSTR 3B of October, which is to be filed by November 20th, 2022. Right. So moving on to the next provision, as you can see the screen, another important provision that deals with adjustments and rectifications for transactions of a particular financial year is under subsection 2 of section 34 of the CGST Act. So subsection 2 of section 4 of the CGST Act deals with the time limit for issuance of a credit note under the GST regime. So amendments corresponding to section 16, subsection 4 of the CGST Act, which was just discussed in the previous slide, has also been made in this section 34, subsection 2. So such amendment in section 34, subsection 2 was made by section 102 of the Finance Act, and the same has also been made effective from October 1, 2022 via notification number 2018. So before the amendment, any registered person who issues a credit note in relation to a supply of goods or services or both was required to disclose the details of such credit note in the return for the month during which such credit note has been issued, but not later than September following the end of the financial year in which such supply was made, or the date of furnishing of the relevant annual return, whichever is earlier. So meaning thereby, the time limit under section 34, subsection 2 to issue a credit note for a supply related to a particular financial year was earlier of 2 dates, that is 30th September following such financial year, or the date of furnishing of the relevant annual return, whichever is earlier. So now after the amendment is notified with effect from October 1, 2022, the time limit to issue a credit note for a supply related to a particular financial year has been extended to 30th November following the end of the financial year, or the date of furnishing of the relevant annual return, whichever is earlier. So as far as the supplies are concerned for the financial year 21-22, the time limit for issuance of credit note as per the section amended provision has been extended to 30th November 2022. However, considering the press release dated October 4 and to avoid any litigation or dispute, the taxpayer may consider such date to be 31st October 2022, since the credit notes raised during October 2022 will have to be reported in GSTR 1 of October 22, which would be required to be filed by the 11th of subsequent month, that is 11th November 2022. And that date would be much before 30th November 2022. So practically the last date to issue a credit note would be October 31st, because such credit note will have to be disclosed in GSTR 1 of November, and beyond 30th November, GSTR 1 of October might not be filed, or the subsequent taxpayer might not get the benefit of the same. So you all must be aware, well aware that Section 37 of the CGST Act deals with furnishing details of outward supplies, that is filing of Form GSTR1, which captures the details of outward supplies undertaken by a taxpayer during a particular tax period. Further, subsection 3 of Section 37 deals with rectification and amendments of particulars in details of outward supplies which are already furnished in Form GSTR1. So another important amendment that has been made in the Finance Act 2022 was in Section 37, subsection 3, wherein the time limit to carry out rectifications of errors or omissions in Form GSTR1, which was furnished during a financial year, has now been extended till 30th November of next financial year. So meaning thereby, in case any omission or error is noticed in the details of outward supplies furnished in GSTR1 for a particular financial year, then such omission or error can be rectified on or before the 30th of November following the end of financial year to which such details pertain. So for instance, in case any omission or error is noticed in the details of outward supplies that were furnished in Form GSTR1 for financial year 21-22, then as per the amended provision, the same can be rectified on or before 30th November 2022. So, however, considering the press release dated October 4, and to ensure that corresponding recipient is able to avail timely input tax credit, one should consider GSTR1 of October 2022 as the return to rectify such error or omission that is observed in the supplies made and declared in GSTR1 of financial year 21-22. So in case GSTR1 of 2022 is being filed after the due date, that is 11th, then the corresponding supplier may not be eligible to claim the ITC within the prescribed timelines of 30th November. So similar to amendment made in Section 37, subsection 3, amendment has also been made by the Finance Act in Section 39, subsection 9, by Section 105 of the Finance Act. So such amendment in Section 39, subsection 9 has also been made effective with effect from October 1, 2022. So Section 39, subsection 9 prescribes the time limit for rectification of any errors or omissions in the particulars which are furnished under Form GSTR 3B of a taxpayer. So for instance, in case any omission or error is noticed in the value of outward supplies declared in Form GSTR 3B, or tax payable on outward supplies has been incorrectly disclosed, or ITC has been short availed or short reversed, or tax payable under RCM has been incorrectly disclosed, then in such a scenario, the amended Section 39, subsection 9 provides an opportunity to rectify such details on or before 30th November 2022. So practically one may consider Form GSTR 3B of October 2022 as the return to rectify or amend any error or omission that is observed in the details with respect to outward supplies or inward supplies made and declared in Form GSTR 3B of financial year 21-22. So in nutshell, effectively, extension of 1 month has been granted because before the amendment was made, a taxpayer could avail or reverse the ITC for a particular financial year by the due date of furnishing of return for the period of September, that is 20th October. But with the amended law, a 1 month extension has been granted, and now the taxpayers can avail ITC for a particular financial year or reverse an ITC for a particular financial year by, in the GSTR 3B of October 2022. That is to be filed by November 20th, 2022. So before discussing the important adjustments and rectifications which have to be undertaken with respect to transactions of financial year 21-22, one last important provision that I want to discuss is the amendment made under section 52, subsection 6. So section 52 of the CGST Act deals with TCS provisions, that is collection of tax at source. So TCS under GST is the tax which is collected by an e-commerce operator from the consideration received by it on behalf of the suppliers of goods or services who make such supplies through the e-commerce operator's online platform. So as per the GST law, TCS is to be charged as a percentage on the net taxable value made by a supplier. In this regard, an e-commerce operator is required to furnish a statement in form GSTR 8, which is commonly known as a statement for tax collection at source. This statement, which is called form GSTR 8, contains the details of supplies made through such e-commerce operator, amount of tax collected at source, and various other details. So in case any omission or error is observed in such statement, then the same can be rectified as per the timelines prescribed under section 52, subsection 6 of the CGST Act. So in line with the amendments which were just discussed in the previous slides, such provision, section 52, subsection 6, has also been amended. And in case any omission or error is observed by the e-commerce operator in its form GSTR 8 filed earlier during a financial year, then the same can now be rectified till 30th November of the subsequent financial year. So practically for any details which are to be furnished in form GSTR 8 and that were filed during financial year 21-22, in case any error or omission is observed by the e-commerce operator in such form GSTR 8, then the same can now be amended or rectified in form GSTR 8 of October 2022. So practically here also 1 month extension has been provided by virtue of the amendment made under section 52 by the Finance Act. So I have briefly explained the key provisions and timelines provided under the GST law that have to be kept in mind while undertaking the rectifications for transactions particular to the financial year 21-22. And now I would be discussing some important adjustments and rectifications which may be practically undertaken with respect to outward supplies for the financial year 21-22. So the most important aspect for a taxpayer is correctly reporting the outward supplies for a particular financial year in its GST return. So in this regard, the first step would be to prepare and reconcile the turnover as reported in GSTR 1 and GSTR 3B with the books of accounts for financial year 21-22. So for this, the details appearing under the relevant turnover ledger of the books of accounts should be first extracted, then tabulated, and then such details should be compared with the relevant turnover that was disclosed while filing GST returns of financial year 21-22. As a precautionary measure, I would recommend that the turnover should also be reconciled with the turnover that is appearing on the e-waybill portal. So this would ensure that your books of accounts, your GST returns, and the turnover appearing in the e-waybill portal are in consonance with the three things. Simultaneously, one should also check that the relevant outward supply has been classified under the correct HSN or SSE code and correct GST rate has been levied on such outward supply. So on such reconciliation, a taxpayer may find some difference in the value of taxable turnover or tax amount appearing in books of accounts and the GST returns. Further, on such reconciliation, a taxpayer may also notice that some of the invoices have not been uploaded in the form GSTR 1 or while uploading the information under table 4A, which deals with B2B invoices of GSTR 1. So the taxpayer has uploaded incorrect GSTN of the corresponding recipient. Or thirdly, it is noticed that B2B sales has been incorrectly recorded under B2C sales or vice versa. So accordingly, after such reconciliation is completed, I would recommend that all the action points should be listed, and thereafter necessary rectifications and adjustments should be undertaken in Form GSTR 1 that of October 2022. So for instance, as I told you, if some invoices have not been uploaded during financial year 21-22, then it is to be added as fresh invoices in Form GSTR 1, and simultaneously GST output liability is to be discharged while filing Form GSTR 3B of October 2022. So in such cases where the liability was not disclosed earlier and the same is now being disclosed, interest under Section 50 may also be applicable in case payment for output GST liability is made through the electronic cash ledger on the GSTN portal. If you are paying the liability through ITC, then there would be no interest. In fact, interest would only arise in case payment of outward liability is being made through any balance appearing in the electronic cash ledger. Further, if any incorrect GSTN of recipient was mentioned while uploading invoices in Form GSTR 1 of financial year 21-22, then such invoice to be amended and correct GST is required to be mentioned in the GSTR 1 of October 22. So, as I explained earlier, as per Section 34, subsection 2 of the CGST Act, a taxpayer is required to issue credit note for the invoices issued during the financial year 21-22 and need to report the same in GST returns filed on or before 30th November. So taxpayers need to reconcile credit notes which are appearing in books of accounts with the GST returns. And on reconciliation, if the taxpayer notices that few credit notes were issued for the invoices raised during the financial year 21-22, but such credit notes were not considered while filing the GST returns, then such credit notes are to be added while filing GSTR 1 for the month of October 2022, and accordingly, the output GST liability of the taxpayer shall also be reduced in GSTR 3B of October 2022. Further, while the reconciliation of credit notes are being undertaken between the books of accounts and GST returns, the taxpayer may also identify cases where credit notes are required to be issued but have not been issued with respect to the outward supply transactions which were undertaken during financial year 21-22. So for instance, there may be a dispute with the corresponding recipient on account of inferior quality or short supply of goods during the financial year 21-22, and credit notes for the same have not been issued till date. So in such cases, it is advisable to settle such disputes with the corresponding recipient so that credit notes are issued and disclosed while filing GSTR 1 of October 22, in fact. So in case there is a failure to do such action, then the taxpayer will not be able to adjust the taxable value as well as the taxes paid by him beyond such date of 30th November 2022. Further, I've just discussed about invoices and credit notes, and now I will discuss the relevance of debit notes pertaining to the transactions undertaken during financial year 21-22. So, as per the GST provisions, there is no time limit for issuance of a debit note, and therefore it can be issued at any time. However, it is important to note that the corresponding recipient will not be able to avail the input tax credit of debit notes in case the same are issued after the prescribed timelines. So therefore, even provisions providing for issue of debit notes is without any time limit. I would advise that debit notes for the transactions undertaken during financial year 21-22 is issued and disclosed in GST returns of October 22. So this would ensure that the corresponding recipient is able to timely avail the input tax credit in its GSTR 3B. So a reconciliation of debit notes should also be undertaken in the same manner as just discussed for credit notes. Thereafter, appropriate disclosures should be made with respect to such debit notes in the GST returns for October 22. So apart from the actions just discussed with respect to outward supply, two more points that I would like to discuss is with respect to export sales and GST and advances. So if a taxpayer was engaged in zero-rated supply of goods during financial year 21-22, then such taxpayer may also undertake a reconciliation between the books of accounts, GST returns, and the data which is available on the IceGate portal with respect to the shipping bill. So in this regard, the details of export turnover, shipping bill number, shipping bill date, port code can be reconciled between the books of accounts, GST returns, and IceGate portal. And in case any discrepancy is observed after the reconciliation, then necessary rectifications and amendment can be undertaken while filing GSTR 1 of October 2022. So this reconciliation and rectification would ensure that there is a uniformity between the export details appearing in the GST returns and the IceGate portal. Further, to my mind, such reconciliation would also ensure proper transmission of export invoices from the GST portal to IceGate portal, and this would ensure timely processing of GST refund for the taxpayers. So one last point with respect to outward supplies is with respect to supply of services. So one may also check and reconcile whether the GST paid on advances received during financial year 21-22 towards the outward supply of services which has been made or was agreed to be made has been properly adjusted in GSTR 1 and GSTR 3B. So for outward supplies undertaken during financial year 21-22, it is important to note that in case necessary rectifications or amendments are not undertaken in the October GSTR 1, which is to be filed before 11th November 2022, then the corresponding recipient might not be able to avail the input tax credit on account of non-reflection in GSTR 2A or GSTR 2B. So it is important that the timely reconciliation with respect to outward supplies is undertaken by the taxpayers and necessary rectifications and amendments are made within the prescribed timelines of the GST Act. So this slide deals with the important adjustments and rectifications which may be undertaken by a taxpayer with respect to inward supplies for financial year 21-22. So apart from correctly reporting the outward supplies in GST returns, another important aspect for a taxpayer is availment of correct input tax credit for a particular financial year. So such input tax credit should be availed as per the GST law. So in this regard, for financial year 21-22, the first step to my mind would be to prepare and reconcile the input tax credit which is availed in the books of accounts with the input tax credit availed in the form GSTR 3B. And simultaneously, such input tax credit availed should also be reconciled with the GSTR 2A and GSTR 2B. Thereafter, based on such reconciliation, in case it is found that a taxpayer has missed certain eligible credits for the invoices pertaining to financial year 21-22, then in such a scenario, the taxpayer shall avail such eligible credit while filing the GSTR 3B for the month of October 2022. Further, on reconciliation of input tax credit as per books of accounts, GST returns and GSTR 2A 2B, it may also be observed that the taxpayer has availed excess credit due to wrong interpretation of GST law or has availed ineligible credit which is blocked under section 17 subsection 5. So then in such a scenario, a taxpayer shall reverse such credit while filing GSTR 3B for the month of October 2022. So in case such ineligible credit was availed and utilized earlier, then applicable interest shall also be deposited for such credit reversal. So further, there can be scenarios where input tax credit of few invoices availed in books of accounts and GST returns are not reflecting or auto-populating in GSTR 2A or GSTR 2B of the taxpayer. Such non-reflection can be on account of various reasons, such as the corresponding supplier might not have uploaded such invoice, or he must have uploaded such invoice under the incorrect GSTN, or he might not have filed the GST returns for that particular month. So in such a scenario, the taxpayer should follow up with the corresponding supplier and ask them to upload the GST invoices on GSTR portal through GSTR 1 of October 2022. So if the supplier confirms that they have uploaded the invoices, then the taxpayer may avail the input tax credit in GSTR 3B of October 2022. So it is to be noted that if supplier has not uploaded invoices while filing GSTR 1 of October 2022 within the prescribed due date, then such credit may get lapsed and the same might not be available in the hands of the recipient. So therefore, I would recommend that timely follow-up should be made by the taxpayers with such suppliers, corresponding suppliers. And further, in case any taxpayer is engaged into import of goods and has paid and availed IGST on such imports, then a reconciliation can be undertaken with respect to such IGST credit as appearing on IceGate portal or relevant bill of entry and books of accounts and GST returns. And based on such reconciliation, if the taxpayer may avail or reverse the IGST credit while filing the GSTR 3B for October 2022. So apart from these actions with respect to ITC, one should also check the transactions which are covered under reverse charge mechanism, either from registered suppliers or unregistered suppliers. And thereafter, payment of tax under RCM can be made if it is found that RCM has been tax under RCM has been short paid during financial year 21-22. And also with respect to RCM, I would recommend that the taxpayer should raise the self-invoicing in case of specified goods or services which are covered under RCM, which is received from an unregistered dealer. So as per law, in case services or goods which are received and are covered under reverse charge from unregistered supplier, as per law, there has to be self-invoicing undertaken. So I would recommend that additionally, taxpayers also undertake this kind of activity. And further, before filing GSTR 3B of October 2022, one may also verify compliances in relation to Rule 42, Rule 43, and 180-day payment to suppliers for the input tax credit availed. So to summarize, for inward supplies undertaken during financial year 21-22, it is important to note that in case eligible ITC is not availed in GSTR 3B on or before 30th November, then such credit may be lapsed in the hands of the recipient. So it is important that timely reconciliation with respect to inward supplies is undertaken by taxpayers and necessary rectifications and amendments are being made within the prescribed timelines of the GST Act. Okay, so this is the last slide. Apart from undertaking the reconciliation with respect to inward and outward supplies for financial year 21-22, a taxpayer may also consider few important aspects that I feel may have a substantial impact on its GST disclosures. So for instance, if TDS or TCS is deducted from a taxpayer on supplies from a taxpayer's supplies which are made by it, then necessary reconciliation should also be undertaken to ensure that all the credit of TDS and TCS is duly availed by the taxpayer. So taxpayers can also undertake reconciliation of the credit which is appearing in electronic credit ledger and books of accounts to ensure that the credit balance appearing on GST portal is in consonance with the books of accounts. Further, in case any material is sent for job work then it may be verified that whether such material has been returned within the prescribed timelines or not. So for inputs, the time limit as per the GST law is 1 year, and for the capital goods, the timeline is 3 years. So once this reconciliation is undertaken, then it should be properly verified that relevant details of goods sent on job work and thereafter received back has been duly reported in Form ITC 04. Further, it can also be verified as to whether any goods were sent on approval basis, and if yes, then it should be ascertained as to whether such goods have been either received, returned within 6 months, or are being sold on issuance of tax invoices. Okay, place of supply. So there can be cases where taxpayer has received the goods or services from the suppliers situated outside the state, and in such cases, as per the place of supply provisions, the corresponding supplier might have charged CGST and SGST on his tax invoice. So therefore, a taxpayer may also verify as to whether the place of supply mentioned by such supplier while filing his GSTR1 is correct or not in terms of the place of supply provisions which are provided under the IGST Act. So in case if the supplier has mentioned the wrong place of supply, then necessary follow-up should be made with such supplier so that he is able to rectify such mistake in his GSTR1 of October 2022. So lastly, I would recommend that whatever adjustments and rectifications are made in the GST returns of financial year 22-23, which pertains to transactions undertaken in financial year 21-22, then appropriate workings and reconciliations should also be maintained. So this would ensure proper disclosure in a taxpayer's Form GSTR9, that is annual return, and Form GSTR9C, which is to be filed for a financial year. And going forward, such workings and reconciliations would also assist in departmental scrutiny and audit. So to conclude, I must say that we are fast approaching the due dates of the October 2022, and therefore the taxpayers are required to reconcile the details at the earliest so that necessary rectifications are made within the timelines prescribed under the GST law. So, thank you. Saurabh, over to you.
Yeah. Yeah, I hope the slides are visible.
Yes, sir, the slides are visible.
Thank you, Sarthak. Good afternoon, everyone. Since we already had a very detailed discussion on the amended provisions, I'll now take up the practical aspects in terms of what all can be allowed, on the GST portal in terms of amendment of GSTR1 or GSTR3B. So this is the portal C, which is there on the GSTR1 return, in terms of amendments allowed. In terms of GSTR1, you can amend the invoice level information for B2B invoices and B2C invoices, large invoices. Similarly, there is an option to amend the credit and debit notes, export invoices. You can also amend the liability declared on advances which have been received in past and any adjustment pertaining to such advances. While the provisions were amended to allow the amendments till November 30th, but the portal was not updated to make such amendments in GSTR1 for October 22. And fortunately, they have come up with the amendments for 21-22 only 2 days back. So now you can also amend the invoices pertaining to FY 21-22 in GSTR1 in the month of October 22. Surprisingly, amendments in credit note, debit note, and export invoices has been allowed in the drop down in the amendment field from FY 2018-19. So I have not tested this practically, but the portal is allowing such amendments, and I'm not very sure if that those amendments cater any specific purpose for amending credit notes, debit notes, or export invoices for prior periods. Coming to invoice level amendments, in case of B2B supplies, we can make the changes in recipient's GSTIN invoice number
date and value, place of supply, rate of tax, and other declarations in terms of reverse charge supplies or deemed supplies. Similar amendments are allowed in case of large value B2C invoices. In case of other B2C invoices, we have an option to amend the place of supply. To be very clear, you can only make the changes in tax invoices, but you cannot revise a tax invoice and issue it as a bill of supply. Similarly, there are allowable amendments in credit notes and debit notes issued to B2B and B2C supplies. So that's about amendments allowed in GSTR 1. Moving ahead, so we had a question in terms of changes in GSTR 3B. In table 4, they have tried to streamline the ITC disclosures in terms of reclaimable and non-reclaimable ITC. In the revised format, all the non-reclaimable ITC reversals, including ITC reversed under section 17.5 and rule 38, 42, and 43, has to be disclosed in table 4B1. So I hope this answers a question posed by one of the attendee. In case of ITC which has been reversed and is eligible to be reclaimed, the same has to be disclosed in table 4B2. So in future, if you are reclaiming the same, disclose it in table 4A5. And additionally, a breakup of the same has to be provided in table 4D1. Also, any ITC which is flagged as ineligible ITC in GSTR 2B for a particular month, the same shall be disclosed in table 4D2. Any incorrect ITC claimed due to any error, even maybe a clerical error on the recipient's part, that can be reversed by disclosing in table 4B2. So this is the whole ITC disclosure which they have tried to streamline. Moving ahead, they have also incorporated a separate table for disclosure of supplies made through electronic commerce operators and covered under section 9.5. So in this case, the ECO has to disclose the supplies under section 9.5 made through it, and the tax liability shall be added in 3B, which needs to be discharged in cash. So in the first row, if you'll see, the ECO has to disclose all such supplies wherein he is supplying goods or services through its portal, and the consequent tax liability has to be discharged by the ECO. Coming to a registered person who is supplying goods or services through ECO, he has to merely disclose the taxable value, that what value he has supplied in terms of total turnover, out of which total value of taxable value of goods or services which he has supplied through e-commerce operators. So that has to be disclosed in row 2 of this new table. So these are the amendments which are there in form 3B. We'll go to discuss few common scenarios related to mismatch and non-reconciliation of records as per GST portal data and as per books. So in the first scenario, where the invoices are recorded in books of accounts, but the same are not appearing in 2B. In such scenario, it is critical to follow up with the vendors to furnish details of relevant invoices which are not appearing in 2B in the GSTR 1 within the amended timelines, that is before November 30th. In some cases, the invoices furnished by the vendors are appearing in GSTR 2B, but the same is not recorded in books of accounts due to certain reasons, including in cases where the recipient has not received a copy of invoice from the vendor. In such cases, it is suggested that, subject to other eligibility conditions, ITC related to such invoices shall be claimed in table 4A5, which we have just seen, for the month of October 2022, if not already done, and simultaneously you can reverse the same in table 4B2 in the 3B of October 2022. This will at least ensure that ITC can be reclaimed in future if all the conditions for eligibility are fulfilled by the recipient. In certain cases, we have also observed that invoices are furnished in IFF utility or in GSTR 1, but the supplier has not filed GSTR 3B. Effectively, in such cases, the recipient has to reverse the ITC with applicable interest, and the same can be availed when the supplier has paid the tax pertaining to such supply. Also, in case of RCM suppliers, the registered suppliers also furnish details in corresponding GSTR1. However, there are cases of mismatch in taxable values which are reported by the supplier and the amount on which tax is paid by the recipient. So it is important to rectify such mismatch and also consider all the adjustments in arriving at the value for paying tax under RCM, read with the provisions under section 15(2) for valuation. One issue being faced by the entities having multiple registrations is that there are place of supply related errors, wherein the supplier has issued an invoice quoting one GSTN, but the recipient has claimed ITC for such supplies in books in another GSTN. So, for example, I'm receiving certain services in the state of Delhi, but the books of accounts are maintained on centralized basis in, say, Mumbai, and that invoice has been booked in Mumbai, but actual POS reported by the supplier is in Delhi. So we need to rectify those errors. So this shall be communicated to the vendors for rectification, or even internal documentation shall be updated to ensure that ITC is available and claimed at appropriate GST registered unit. Coming to next, while we have discussed the amendments in GSTR1 and 3B, and also the timeline for filing GST annual returns is closer, it is important to consider the revised disclosure requirements in GSTR 9 and 9C while finalizing the returns for October 2022. So this is precisely to avoid any duplication of work in terms of reconciliation of all the books with the GST portal data. So there are certain fields in the annual return which are now made mandatory for FY 21-22. Like netting of credit and debit notes is not allowed for disclosure in annual return. Now you have to specifically disclose the credit and debit note related adjustments, and it is not allowed by direct netting off in the gross outward supplies reported in annual return. Also, specific disclosure is required in case of non-GST supplies from FY 21-22 in the annual return. So there was an option to club all these disclosures in annual return related to non-GST supplies, exempted supplies, and nil-rated supplies. Now they have mandated that from FY 21-22, you have to mandatorily report non-GST supplies separately in annual return. The option to disclose exempted and nil-rated supplies on a clubbing basis, that is still available. So we can report exempted and nil-rated together in the exempted field only. Next is HSN summary. To the extent the same is related to outward supplies, has been made mandatory for FY 21-22 in the annual return. For inward supplies, they have not yet made it mandatory for reporting an annual return to the extent it is related to inward supplies. Coming to reconciliation statement, ITC booked in previous financial years, and when I say booked, I mean the books of accounts, and claimed in current year has to be separately reported in the reconciliation statement. Similarly, ITC booked in 21-22 but claimed in 22-23 has to be separately reported in reconciliation statement. So the whole idea is that don't just prepare for GSTR1 or GSTR3B of October 22. You need to factor all reporting requirements, even from the perspective of annual returns and reconciliation statements, because the due date as of now is 31st December. So that's all from my side. I think we can now open the session for Q&A.
Sure, sir. Thank you for that insightful session. We have a question from Riddhi, I guess. What are the conditions to be fulfilled for transfer of ITC in respect of sale, merger, or amalgamation, etc.? So, yeah.
So in case of transfer of ITC, there is a appointed date. Normally the High Court has approved an appointed date, and there is specific form. I'm not recollecting the exact form, but the transferor entity has to fill that form along with a CS certificate that what all ITC is available in the books as on the date of transfer of entity in case of merger or any other sort of acquisition, and the recipient has to accept that particular form on the portal. After acceptance, that particular credit which is there on the appointed date in the books of transfer, that stands transferred to the recipient. So CS certificate is one thing, and the online form you have to submit That's in terms of merger and amalgamation cases.
Exactly, Saurabh. That form is called ITC-02.
Yeah.
So the transferor will have to file ITC-02 for the balance of credit appearing in his electronic credit ledger. And thereafter, once the form is approved, then the transferee will get the input tax credit in
Correct.
his credit ledger. So that
Correct.
form is form ITC-02.
Thanks, Arvind. Yeah.
Yeah.
Okay, so the next question that we have is, for supply of goods, invoice should be prepared in?
Basically, for supply of goods, invoice should be prepared in triplicate. So 3 copies of invoices should be prepared by the supplier when he's undertaking supply of goods. So the first copy is should be endorsed as it's called original for recipient. Second one is called as the duplicate for transporter. Third is called as the triplicate for the recipient. So for supply of goods, invoice will have to be prepared in triplicate.
Okay, sir. So we have the last question. How to fill input tax credit in GSTR 3B from GSTR 2A invoices?
I think Saurabh just discussed that. In fact.
So as we discussed, they have issued a specific, I mean, they have made changes in GSTR 3B. So now what happens is whatever details are uploaded by the recipient in his GSTR 1, those are auto-populated in 2B, and from 2B, they are auto-populated in GSTR 3B of the recipient. And wherever those invoices are flagged as ineligible, those invoices are mapped or auto-populated in table 4A D2 of GSTR 3B. And those are editable fields. So the recipient can edit those fields as per their internal computation or workings.
Right. So basically, a monthly reconciliation will have to be undertaken by the assessee with respect to its books of accounts and GSTR 2B. So whatever, as you just told, whatever ITC is appearing on the GST portal, that will be auto-populated in GSTR 3B. And thereafter, whatever amount you have to reduce and whatever amount you have to reverse, it can be undertaken through those tables, in fact. So going forward, the primary reconciliation would be GSTR 2B and your books of accounts.
Okay. So I think we have another question from Aditya as to how to disclose provisional reversal of Rule 4243. So in the revised 3B, you have to disclose it specifically in table 4B1, which provides that reversal as per Rule 38, 42, and 43, and Section 17.5. So in case after closure of the year, or even when you are filing the October 22 return, you can make changes in that particular field only, and even negative amounts are allowed. So that will be factored in when we look at the complete year. So whatever credit is there, that has to be mandatorily reported in that particular row only.
Correct. So this reconciliation under Rule 4243 will have to be undertaken on a monthly basis. For instance, a client, a taxpayer is providing exempted supplies as well as taxable supplies. So he will have to first ascertain the credit which is attributable directly to the exempted goods, right? And thereafter, he will have to ascertain the common input tax credit of ITC, and the same will be reversed in the prescribed formula under Rule 42. So during the financial year, reversal should be undertaken on a monthly basis. Then for the whole financial year, the reversal should be recalculated, and it is to be checked whether there is any addition in the reversal or credit has been excess reversed. And accordingly, in case there is any excess credit that has been reversed, the same can be reclaimed through GSTR 3B. So Aditya has also mentioned another query.
Yes, is it not like that table?
Yeah, so if we see the advisory issued by GST portal, they say that, you know, whatever amount of credit which is non-reclaimable, you have to disclose in 4B1, which says as per Rule 38, 42, and 43. So in that case, if you have made an excess reversal, you can, definitely claim that amount at the year end. And as I said, negative values are also allowed on the portal. So that will be factored in when you'll file that particular return for that particular month. So whatever amount of total credit is there, that will be adjusted against that negative value. But there is no other option to report other than 4B1 as per the advisory issued by GSTN.
I hope, Aditya, that must have cleared your query. So I would now like to ask all the delegates if there are any further questions from our speakers. Thank you. I think that is the end of all the questions here, sir. That's the end of the Q&A round. I would now like to express my gratitude to all our esteemed delegates of this digital webinar for their presence and contribution to make it a great success. I extend my gratitude to Ms. Nidhi Goyal, Ms. Archana Jain, Mr. Shanki Agarwal, Mr. Saurabh Besser, and Mr. Sarthak Garg for taking out the time from their busy schedule to give us an understanding on the revamped ITC provisions and GST adjustments and rectifications for FY 2021-2022. Thank you for the insightful session we have received from you. We hope that our participants must have greatly benefited from it.
Thank you. Thank you.
Would like to request all our participants to please turn on the cameras for a final picture. Thank you. So that'll be.
Thank you.
Thank you for your time, sir.